Hey everybody, DayTraderRockStar here with you in a special video over the weekend, Super Bowl weekend, but I want to bring you some great knowledge here. We're going to discuss some of the market activity last week and to show you what we picked up on it and some other great things, but mostly this video is going to talk about what we always talk about, and that is really understanding what positions, what trades you need to be taking, and how important it is not to take any trades that you're not 100% sure on. Now, let's start off with just an update. Right now I'm in the process of writing out the criteria for the copy trade. Now, the copy trade has been slowly rolling out, and I wish it was I was a little bit more aggressive on it, but I knew it was going to be a little issue. Just starting to get things rolling on that and taking the trades and making sure everything's set up properly and stuff. So I feel at this point now that I'm going to just kind of launch the copy trading project and the guidelines and exactly the rules. I think the rules are very important for me, and the rules are important for you to understand what I am going to be doing with the copy trading program. If you hook up your account to mine, these are the trades I'll be taking. It'll be it's going to be a slow process, but I almost guarantee you that all these trades will be successful. All right. And that's the important thing. I know what works in this market. It's about patience and discipline and letting it come to you, letting that trade come to you. All right. And that's really important with this project, because right here I say, note, I've been doing this for a long time, over 25 years. And trading comes down to a simple concept: buy low and sell high. Now, a lot of people say, well, no, you could short and there's options and all this. Come on. I'm just trying to get a point across that there's certain things to do, right things to do. If you're buying a stock and you're going to sell it later, you want it to be higher to make a profit. Now, through our variety of indicators, momentum signals, it's easy for me to identify a market change, a directional change in the market that's going to happen. Because of the divergence setup and some of the quad rotations and some of the other setups we use, we're able to see these movements, or see these I call them pivot areas in the market. When the market changes from one direction to another, we're able to see that before that happens. Instead of being reactive, we're proactive. So this is this technique that I'm using with the copy trader is just focused on one setup. It really is. It's really, my go-to setup. I would like to just take the quad divergence setups in this, but a regular divergence would be fine too. So again, just is very important that the techniques are about waiting for the signals to appear. There will be movements around these signals that move the market. So you might say, oh, John, the market just went up 5 points, but it didn't give us a signal. Why didn't you get in that? This is about this is the strictest criteria you will find. You'll feel comfortable, actually. This is meant for your prop accounts. So you should have an account that you attach to it, and you don't have anything to worry about it. Just let it be. Don't try to juggle. Oh, I got to use that account. I got to make. He's not taking enough trades. Don't worry about that. These things are cheap as they come. They're $20, $17, $19. It depends what the coupon is. DTR 83 right now is the coupon, 83% off. I think it gives you an account like $20-something. You can look in the description for the coupon. So this is not an issue. So do not get frustrated if there's not a lot of trades. And I do have people hooked up to this. It's on the Replikanto software. That was it. So our entry criteria, all right? So this is going to be on the page. Everyone's going to get a copy of this. It kind of goes down what I'm going to be trading, what the strategy is, the frequency of the trades, contract choice, the trading size and profit potential, different news events, and if we're going to trade into them, and everything else. And I want to give an example of the trades that I'll be taking here. And again, the quad rotation. This is actually a quad rotation on the VWAP. That's a very powerful thing. And again, these are not, they're not instantaneous trades, but they're probably not going to be trades that we're going to be holding all day. I mean, that's a very difficult thing to do. But in some cases we might. It really depends on where the divergence comes in. If it's a 5-minute divergence, if it's a time frame, like this is a pre-market. I'm just showing you examples right now. I have other examples to put up here, but I wanted that, I just going to finish this up. I have about 7 other examples of 7 other trades that we're going to be taking on this. All right. So very strict. Everything is going to be just tightly, tied into the criteria, and that's going to be important. Everything else, I do trade other accounts during the day, during the show on DTR2. I'm more liberal with those and taking those and having a good time trading the markets and stuff. But this is strictly, a very, very tight one type of setup we're looking for. When I have it, we're going to take it. Everyone's connected to is going to get in it. The other thing I would say here, just trade size and profit potential. Each trade will contain 3 to 5 contracts on average. All right, and I'll be using the MES with the Replikanto software here. You're able to switch over. Let me show you this fast here. Should I do it? All right, here it is. If I have, this is on the following account. If you're on a following account and you have your following account and you're sending that trades to whatever account you want and you're turning that on and it turns green, over here you could actually cross orders. If the MES is coming in and you want to have those trades taken on the ES, you could just click on that and then you're good to go. You also have an opportunity to flatten for whatever reason, but I would just, I would also, use what I just said. I'll be taking these in the MES. Trades will be conducted using the MES contract by default. Participants have the option to switch to the ES contract via the Replikanto software. It is recommended to activate the crossover switch for the ES. All right. And the reason I say that is these setups that we get are typically 3 to 5 contracts. I would say each trade is usually a profit of $20 to $100. All right. So if you have the ES contract, because this is the MES, it's 1/10 of the ES. So if you actually switch this over to the ES, you would just add another 0 to what you would normally be making. So it'll be $200 to $1,000 per trade. All right. So that's something that you could do on your own. Again, the other thing is this is voluntary, and there's no and I recommend using your prop accounts, evaluation accounts. All right, evaluation accounts only. That's the only ones I want to have connected to this. So that's the disclaimer. No other ones allowed. I can't tell you what's connected on it. I can't see. I can only see the Replikanto license that I connect to my machine. But that is the criteria and my disclaimer. Let's see what else. All right, so everything else is covered there, and again, I'll show you the trades to be had. That so this, again, going into this week, we're probably going to put this at the top of the list of things that we're going to be working on. All right, now that I have this out and we're ready to go, I'm going to be using this a lot. So, but again, this would be a trade that I want to take. So I'm looking at the regular markets now that we just came out of this week. I'm just rolling back until. Oh, I went back all the way back. I just scrolled all the way back. This is all the way back. Wow, look at that. I don't need to scroll back that far. I scrolled back a couple months. I didn't mean to do that. But I'm actually going back. As the market's going, we're identifying these. You could see this. I could stop anywhere and point out a divergence to you. And you'll see that divergence move in the direction, and that's our pivot area. So if we have something like this, I want to be able to take that. Now I'm not going to be up at 3 o'clock, but we do see a lot of these happen at 3 o'clock. This is a textbook divergence. A low, a lower low, much higher low, and you see this angle, the blue line. It's up here right around 9-10%. That's where you want it. The higher this angle off of that 20, the better it is. Then you have situations where you might have a bear flag. Now, I'm not really going to take the bear flags unless we got a perfect one. And this is actually a nice bear flag where that 60-10 stays underneath the 20 line, and this rotates up to the 20 line. So you have a 20-20 bear flag here. So whenever you get that if this is staying embedded and this gets rotated up, right at that point it gets rotated up, and this is under the VWAP too. Right at that point right there. When it's overbought, that's your bear flag, and that's where you probably should start to see a rotation back down. So the market has continued to just give you these setups, and this is what we're going to be looking for. So let's just jump up into, let's just go through these, a couple of these. Look at this, perfect divergence here. And again, you just get used to understanding that these setups will come to you. There's only really 2 or 3 that we're looking for. The pure divergence, maybe the double bottom divergence, maybe the relative divergence. These are terms that maybe you're not familiar with. But believe me, you want to learn them. You want to put this into your toolbox. This is what you're going to be using. The bear flag, very simple. Downward movement in the 60-10 or embedded. A fast rotation on the 9-3 up to the 80, and it fails to get above the 20. Right there is your bear flag, and that drops off. Now we kind of had some other thing. Now I'm just looking at, these are some things I put in the market as the market's just trading along. We're looking for things and stuff. I identify like a quad rotation right here. Whenever we had the 4 vertical lines, that's a quad rotation. And I'll sometimes mark these down, meaning that this is embedded, this is a rotation, this is a flag, and that's a move up. Here's another flag. So you'll see some of the hash marks I put down on these charts. That really represents the 9-3. And when that 9-3 gets oversold and you're very strong, and we're kind of measuring this out, it's not going to be perfect. Sometimes it might be 79 to 78, but over time you'll realize strength brings on more strength. If the market's doing something, it's being pretty aggressive about it. Don't try to top the market. Try to figure out where the market's going to pull back and go short. I mean, it does make sense. Everyone wants to do it, but the odds are it's better to get the pullback and go long than get the pop and go short. Because a pullback on a nice pullback on a bullish trend usually ends in a divergence, and that gives us much bigger moves, like here and here. So again, every day we have these opportunities. These opportunities are here. Here are the divergences, these little pullbacks. All we have to do is wait for our opportunity. It's going to come. I'm going to be there showing you where those things are showing up. You're going to have to be there pushing the button. Let's just go to the end of the day on Friday. Let's just all the way here and see what we looked at today. All right, so this is Friday. Market opened up. We actually identified a couple bear flags right off the bat. So nice bear flag here. Got the rotation up, right? This was kind of flat line down here. We knew that. It rolled over. Then we were starting to maybe look for another one here, but it actually didn't really break down here. We kind of broke out of the falling wedge pattern, started to move back up at 11 o'clock. There was a sneaky divergence at 10:40 we called, and that was kind of a sneaky little divergence right here. And once we started to move up here, we started to gain that strength. We had another little kind of a double bottom divergence there, maybe a little topping divergence there, but it turned into a bull flag. Again, very strong markets. In strong markets, we want to look for buying opportunities. So we're always waiting for that pullback and trying to identify. This is what we're going to find out in these grind up markets. Will be our best trade. A pullback into a recognizable channel and a divergence that ends that pullback, because a divergence inside of a channel will break out the channel 9 out of 10 times. So if you have a kind of a pullback channel, you're always looking for that lower low to be a divergence. If you have that, then the odds of that channel, which is here, 1, 2, 3, 4, here's the divergence, that breakout comes, that's what you're looking for. Your target will be outside this channel right here. And then that was a Friday here. Not much else happened. And overall, kind of a choppy week. Even though we're up, it was kind of a different type of week. We didn't have the divergences I wanted. That's why it appeared to be kind of a slower week with the copy trading. So that's another thing. It concerns me that I don't want to push this. I don't want to force it. take trades because people want me to take trades, and I want to be disciplined in this. I want you to understand this is open to lifetime members. You could attach this and set it and forget it. All right. But I'm not, don't count on it. Don't say, all right, just don't hound me on it. It will happen. I will take these setups, only the best setups. It's going to be easy peasy. Just have to have patience. All right. So that's my spiel on the copy trade, and I think we're going to go full blast on Monday. So hopefully that will work out good. I will finish up that and put the criteria out there, and I like looking at charts. I'm just always looking at something here. That was a nice area here. Oh yeah, that was the pullbacks to the trend lines. We trade these during the day anyway. I mean, we're not missing anything. There's still opportunities out here. I'm just zooming through here pretty fast. Here was a divergence, and you see this channel? Let's see, 1, 2, 3, 4, 5. So you have a nice channel here, nice channel here. Lots of times you'll find that divergence inside the channel. That tells us when we have. We actually had it right here. It was a nice little angle up, probably about 7-8 degrees angle, higher above that 20. You can see it on the 9.3. You can see it on the 9.3. You can see it on the 14.3 here also. 14.3 a little, and that just kind of gives you a better feel for an upside push. It doesn't have to be the end of the it's going to go all the way up. It did come back down here fast. Oh, one last thing I want to show you guys, if I can find it. If I could find this, I just was making some notes on these charts and copying them, so I got to find this. If you guys have any questions or anything, or need help setting this stuff up, please email me at ironaction@yahoo.com. I am only opening this up to lifetime members. It's a lifetime member benefit, so you have to be a lifetime member. And I know probably, and I will also be sending these. I'm looking for this. I will also be sending these alerts out on the Zello network. So I will say this is a copy trade alert. This is a copy trade alert. So I want to add that kind of feature to the. Is this something I was looking for? I was back here and I was doing some charting. I might have went back too far. I might have lost it. Might be gone. Oh, here it is. Was this it? No. Well, I wanted to show you. Maybe that was. We're getting close to it. We're getting close to it. That was a quad. That was the VWAP. Yeah, maybe not. So anyway, I was going to show you. Here's the 2020 bull flag. So again, the rotation, this has to be above 80, 85. Higher the number on the 60-10 or the lower the number on the 60-10, that flag is to be more powerful. But that's a good flag right there. And then let me see if I can find this. It should be right after that. And what it was a stop. Here it is. So here, look at this. Check this out. Last part of this. Just remember, the market is always out to get you. Remember in the movie The Matrix, and you had those sentinels, and they had to turn off their ship and make sure all because the sentinels were searching them out. This is like the market's always searching out your stops. All right. You have a great setup here. You have a great divergence, steep divergence, unbelievable setup. Probably the best setup of the day. and very fast, and we got a nice powerful move up here, and everything looked good. We had a nice flag. We're starting to flag out here. A very nice flag. Everything looked good, and then all of a sudden, boom, we drop out. Whenever we have a good divergence, I see this a lot. We get a nice move up, we kind of flag, and then we hit back down, and then we grind all the way back up to where we were. And I call this a stop run. And what the market's doing is saying, all right, that was a good setup. Maybe a lot of traders are in here, and this is their, they're in here, and they're putting in their trailing stops, basically halfway or a little bit past that breakout there. They got their trailing stops in there. They got a nice entry. So when the market comes back, it comes out and shoots down here and clears all that out. All right, clears it all out, and then starts heading back up again. Now you have it. All right. So the market says, oh, higher low. Let's put in our stop here. So let's do that. Let's put our stop in here. Let's make it a color. Let's extend it to the right, and let's make it something we could recognize. Not pink, orange. Let's do yellow. Yellow. All right. So now you have the market here, and you can see this yellow line. That represented that last pullback. That was the best divergence of the day. Market kind of went up, pulled back fast, and then climbed up even higher. Ran into a trend line, had a beautiful, beautiful flag here, quad rotation inside of a nice channel, and then popped again. And then what happened here? Look at this. Market came down, and we came down to those stops, and we hit them again. It was like the market just flushed out here. But this might have been some news. It probably was some news. It was 2:20, a little after 2:30, Wednesday. I don't know what that was 100%, but it probably was some news that helped out. But I wanted to show you how important it is to kind of, if you have stops or, a good level, the market tends to come out and take those levels out. We came down here from just a couple points and then grinded right back up. And then that was it. But, you don't have that problem if you take profits. So these are... this is a great setup here, a great divergence. But at one point, you have to take a profit. I don't care if it's at the 200 period moving average, the VWAP, or you happen to catch this move up here and you just got out perfectly. Eventually, you have to take profits, and you just have to wait for the setup again. There will be another setup. There's a little double bottom divergence, a higher rotation right there, and the market moved up. Here we had a quad rotation right here. Triple stochastic at the first time it got oversold, and that was the move here. Here we had a bull flag. You can see a rotation down to the 80. This was holding above the 85, 80, or the 80 level right here. And you got a little move. And again, these are smaller moves. I don't know what happened here, but we kind of climbed right back up. We flagged out again, and then it was off to the race. And now the market's, of course, overnight. Even overnight, you get some of these moves. You just have to wait for them. I don't mind being in front of the computer at 12, 11 o'clock, 12 o'clock if there's a little leftover volume for the day. 3 o'clock, always a great time to take a look at the markets for divergences. 3 o'clock, for those European traders out there, this is where I would be looking for that double bottom, higher low right there. I mean... It's like shooting fish out of a barrel. And you got, and again, maybe it's 68, maybe 69, maybe it goes up to 71. It's not a big move, but you do get a kind of more of an aggressive move off of a divergence into a channel. And 9 times out of 10, that channel will be, would be taken out to the upside. So something like this, you look for a point. You put a couple of ES trades, especially with your evaluation account, you're not really putting a big order on the market, considering this is a sim. So you're probably going to be able just to ride the coattails of this move, be in and and be able to profit from this very easily. It's just this was what you had to wait for at 320. You can't just randomly get in this market. All right, you can, but you're going to be fighting. That was a nice little, kind of almost a quad rotation here. It took a while for this to get down. And then this just got down to that 20 line. This barely missed the 20 line, but sometimes that happens. You know, again, knowing when to get in, knowing when to be in. How many times have you taken a trade here thinking it's going to pop, and then you look back at it, and all your stochastics are overbought? Every time, you know. If you buy any time up here, your stochastics are overbought. Short is going to, you know, maybe down, you hold on to it. You have to deal with some of the chop, and eventually moves higher. But why even deal with that? Always buy when your stochastics, your quad rotation is here. There's a much better chance that you probably caught the bottom and you get a nice big move up, right? Look at that. And we zoom out here. There's not, you know, it only comes around at 60-10 is, you know, that's my little baby. And it doesn't come around too often, but when it does, you know, I'm not, you know, there's no smoke and mirrors here. It's a big move. Here's one right here. Right here. Right? Not a big move. Here's one right here. Big move. Here's one right here. Big move. Here's one right here. Big move. This is close to one. Well, big move anyway. This was way off the level here. We won't count that. And then down here, it did get a little choppy here. There will be times when there might be a low here. Didn't get a big move. It went down a little lower. Didn't make a big move. Eventually got a kind of a double bottom 5 minute here. There will be times, like I said, this is a higher probability zone. You know, this is where you have your opportunity, and you have to take that opportunity. If something starts to fail, or you get a fast rotation, you don't get the move expected, you take it off. You know, especially on the evaluation accounts. It's not like you're going to go bust on this move. It's just not moving. If you get a rotation that doesn't get moving, just take it off. Simple as that. Most of them will work out. What I'm trying to tell you is don't get into anything unless it's set up for you. You don't have to get into anything unless you have that thing. This should be number one go-to understanding. Like, all right, I'm thinking of taking a trade here. Do I have a quad rotation in my favor? Because when I do, this is the type of moves I have. If I don't, and I'm like, oh, I'm buying, and all four of these stochastics are kind of overbought here, but I have a hunch that it's going higher, and most likely it's not. All right. If we're feeling some weakness in the markets, and things are failed, and this is embedded, you have to recognize the embedded stochastics and then sell every rotation of the 9-3 because that are going to be bear flags. So everything is defined for us. Everything is defined. It's about patience, discipline, taking the trades, taking your shot when you have your shot. And that's it. I hope you gained some knowledge from this video. If you need further help, of course, you head over to DayTraderRockStar.com. And that's it. Go 49ers.